The transparency, the openness, the communication is more than you could expect. I'm sold.
Don't let the fact that you don't know something or don't know enough about something hold you back.
I knew I wanted to invest. What better way to invest than to invest in what I already know that I love, which is real estate?
It was initially the 12% return, but it quickly turned into the people.
Hi, and welcome back to another episode of the Multifamily Masterclass. Today I'm joined by two awesome guests, as always, Jamison Manwaring and Heidi Butler. And today's topics are going to be fun topics. It's going to be like a college-level econ class. We're going to go over why there's so much optimism in the multifamily market moving forward, and we're going to support this thesis by real data. So you're going to hear about what has been happening with supply, how is demand keeping up, because I know you guys see all this oversupply in the market, all these new units being built, and then the expectations moving forward. So the first thing I want to talk about is a graph done by Real Data, a real page, and it's titled Apartment Supply Surged to 50-Year Highs and Demand Kept Up. So if you look at this graph, and we'll have our podcast producer, Ali, put the graphs in this, but you'll see in 2022, 2023, and 2024, these unprecedented amounts of new supply coming out of the market. So Jamison, what's the story around this? What are we seeing with supply?
Yeah, and I always like to start this conversation by kind of going back to the basics with supply and demand. And every investment has different drivers. And if, as an investor, you have to get educated on what are the drivers of this type of investment, of this industry, of this sector. And, I covered software stocks, tech stocks as an equity analyst earlier in my career. And the drivers of the performance of those investments were completely different. So going back to housing, the reason why we talk about this so much is because this is one of the primary drivers, and I'm talking about supply and demand of housing. This is one of the primary drivers as you look at the performance of investing in any type of real estate. You can look at that specifically for housing, which is what we're going to talk about today, but I'll give you one other example. One thing that they're talking about right now is if the federal government closes a bunch of buildings in Washington, D.C., it's talking about maybe half of the federal buildings would be empty and the government would sell those, then people are saying that those buildings would sell for like 50 cents on the dollar in Washington,
Wow.
D.C. So that is supply and demand. The demand has always been strong for office in D.C., and it's just the values have continued to go up because Washington, D.C. and our governments continue to grow. When we have a big pullback in demand in an area like that, and this is why real estate's always local because we're just talking about one big metro area, that's going to be a huge driver of people who own those buildings, and it's going to disrupt things. So I always like to just talk about that. When you think about an investment and should I make an investment, what is the driver? What's going to take this investment up? What could take it down? It is a key thing with real estate, and we're talking about new supply of construction of new housing. So in housing, we're in a different situation than office because we have more people who need housing than there's enough supply for in general. We've had a bunch of new supply of apartment buildings come on over the last few years, but as that's happened, then you get what's called absorption, and that means, it's kind of the word definition, the number of units that have actually been rented or absorbed. So as we look at this and we see, to your point, Bart, that the last couple of years we've had this huge spike in supply.
Mm-hmm.
This was driven by really low interest rates.
Yeah.
So really low interest rates, and people are saying, okay, let's go get money at 3.5%, 4%, go build an apartment building. So we got all these new apartments coming on. So you would think that, there's going to be a big shortfall in absorption or these units getting rented. And it's been the exact opposite because demand has kept up. So we see these apartment buildings, if you're in a metro like Phoenix, you see these new ones coming on and they just continue to get leased up. That's not going to be the case everywhere, but it's definitely being the case here. And as the data we're looking at here is nationwide. And so on the demand side, because interest rates are higher, the cost to go buy a home is higher. More people are renting. We've been talking about this for forever, and now we're seeing it in the data that they are renting.
Yeah. Yeah, no, looking at the numbers here, in 2022, there's over 300,000 new units delivered onto the market. 2023, over 400,000, and 2024, over 500,000. So you have this big climb of new supply coming onto the market. And then I want to flip to the next graph and talk about what happens next. Because this next graph is titled, U.S. Multifamily Housing Starts to Plunge to a 10-Year Low. So we just talked about in 2022, 2023, and 2024, you have all this new supply. Moving forward, there's a significant drop-off to this 10-year low that we're talking about. And we see very little plans for construction across the U.S., but specifically in the Phoenix metro area as well. So I'll open it up again. So why is there such a significant drop in new supply? And what do you guys think this means for multifamily investors?
So there was a story by ABC 15 News this last week, because in Phoenix, even with all of the new supply, the city sees what's happening with permits over the next few years, and they're concerned with what's going to happen with the lack of affordable housing and lack of housing, because we continue to see a lot of growth in Phoenix. And so people need places to live, but they've seen this exact thing happen where it's dropping off a cliff. New units, additional supply is not going to be coming on. And so the reporter from ABC 15 covered a story from the mayor of Phoenix saying, hey, we're doing okay right now, but as we look out the next few years, there's not enough housing. And they came in and we talked to him about even property across the street from our office that was planned apartment building and has all been shelved. It was new construction, 250 units, all been, the buyer backed out of the deal. These deals are not happening anymore. It is going to be an issue as we get into later part of 2025 and 6 and 27. There's not going to be enough housing units. And also at the same time, though, rents have been flat for 2.5 years. They haven't gone up at all. And if you're a property owner, maintenance expense has gone up, insurance has gone up 15% in many cases. So if you're a landlord, you've had those additional costs with no increase in revenue.
Yep.
So rents need to go up to offset that cost, and they haven't gone up for 2.5 years. And it costs so much more to own right now than to rent. So the rent needs to move up so that they're a bit more in equilibrium.
Let's just talk a little bit about home costs versus rent costs. I did some back of the envelope numbers this morning. Any guesses on the Phoenix average rent right now?
I want to wait and see what you say so I'm not wrong. But probably like 14 or 15.
I was about to say 1,400.
Yeah, $1,367. Then I ran a number, the average home price here of like $515 with a first-time home buyer, which is really the new renter situation, like a $25K down payment, 6.8 interest rate. You're looking at anywhere from $3,200 to $3,700 in costs, $2,800 to $2,900 in principal and interest alone.
Double the cost, basically, 50% higher.
Yeah, for no reason. I mean, you could wait it out and get the same home for a better interest rate. I mean, it makes sense to rent right now for so many people. Yeah. But the rents are so out of line with the mortgage payment. I mean, it's so far. There's such a stark contrast. We have to see it come up and beat it.
Yeah, and here in Phoenix, we really take it for granted because our rent here is actually really affordable. Mm-hmm. It's still an affordable place to live. Not necessarily if you're going to buy a home. If you're going to buy a home, your costs go up. But to rent, it's an affordable place. When I lived in New York, it was a 800 square foot apartment, 2-bed, 2-bath, $4,500 a month.
Yeah, wow.
And I paid half, and had a roommate that paid half, and that's very common in New York. $5,000 a month, $5,500 a month for one bedroom, and you just, like you said, it's $1,350, so that's very affordable. The landlord covers all your expenses. Your AC goes out, you get a new one by the landlord. So the rents here are definitely poised to move up. It's not good news necessarily for renters, but I think they have a lot of room. Their incomes have gone up. Rent hasn't gone up to the same amount, and it's still relatively affordable.
Yeah, and historically, to Jamison's point, renting and cost of owning run in parity. You know, they're similar. It's 50% higher to own a home right now. So rents will catch up. If we're basing off historical data and trends, rents are going to catch up.
Yeah, it always ends up being at equilibrium just because of market forces.
Yeah.
It's capitalism. So ultimately, people will just rent if it's way more affordable, and they won't go buy a house until they're like, it's the same cost, guys. Let's go buy a house. Okay, we'll buy one now. But when it's 50% more to buy a house, why would you do it?
Yeah.
So thinking of this, the new construction coming to the market, this data pulls through November of 2024, and I know you just talked a little bit about it, Jamison, but with the new administration, 3 to 4 years out, because that's really with new construction what we see, this first year is going to be kind of trying to get the government in order, whatever Trump would like to do, start getting things in place. How do you think it looks 3 to 4 years from now?
It's not really the administration that impacts this multifamily as much as it is interest rates.
But in new construction, it doesn't, with like tariffs, with the fees. What is it like
Well, the new administration is trying to push that developers have less regulation to build, but it's still at the local level. So a lot of it from DC is visionary and optimistic, but you have to go through the city of Phoenix if you want to build something.
Right.
And the biggest driver of your cost as a developer is your interest cost. Being able to get a loan to build it,
Sure.
and then to convert it to a long-term loan. You know, they call it construction to perm financing. But then your main objective for a lot of the builders is to sell it once it's completed and leased up. And because interest rates are so high right now, higher relative to where they have been, there isn't a buyer to buy it at that market. There isn't a consistent pool of buyers today, because builders want to sell it for a 5 cap. Don't want to get too much into what that all means, but they want to sell for a 5 cap. I talked to a friend of mine who's building one. He said he'll sell it for a 4.5 cap. And I'm like, that's a really high price. The lower the cap rate, the higher the price. So there's a little bit of an inverse relationship there. That's also why builders aren't building right now, is because they don't know if they can sell at that value because of where interest rates are at.
Sure.
Yeah, and then I want to talk about the last topic of what's happening with rents and values of these apartment buildings moving forward. So we just talked about, we had this record-breaking amount of new supply coming out of the market in 2022, 2023, 2024. But absorption actually outpaced supply. So all these units got filled up. And then we move on into 2025, and we're seeing a drop-off in new supply. So now we have the first data point for the first quarter, or the last quarter of 2024, and we're seeing the first uptick in rent growth. What are we seeing with our own properties? Are we seeing this across the Valley right now?
So we are on the cusp of a 3 or 4 years growth of multifamily values and rent. And we are just starting that right now. So if you are a potential investor, if you're looking at buying an asset, if you own an asset right now, the next 3 or 4 years should be very good for you. That's because the last couple of years have not been good, and it's set us up now for rent growth and for the ability to buy assets at a discounted value because interest rates are higher.
Yeah, and as folks look to reallocate some of their investment dollars, I know you kind of just touched on it, but why do you think now is the most opportune time to invest?
We have started to see with our own properties an uptick with rent increases. Some of that at the first of the year, it gets a little bit distorted because people don't like to move during Christmas. And then in January, you get a lot of movement. So we're starting to see how that shakes out. But in general, we've been able to, in the last 6 months, start to finally see some increase in our rents, and they were absorbed well, and we had lease up. And that validates what these national numbers are seeing too. But I think it will, this year, I'm not expecting big increases in 2025 until we get to the back half of the year, because there are still units that are getting delivered right now in Phoenix that they've got delayed, and now they're finally getting delivered. A lot of these new deliveries, they give 2 months free. So it might be $2,500 a month, but you get 2 months for free on a 12-month lease. So you're basically paying 10 months on 12 12-month lease, so that takes your rent down to like $1,700-$1,800. So you get a lot of people who want to pay $1,500-$1,600. They'll move into a new place, and they're kind of upgrading. Some of that's going to go on throughout the early part of 2025, but as we get the back half of the year, and then as we get into 26, 27, 28, we're really going to be set up to see rent increases. Thank you for listening to our podcast, the Multifamily Masterclass. Please subscribe to get all of our new episodes.